Hey there, people. This is episode number 22 of the Under the Radar Real Estate Podcast. As always, I'm your host, Josh, with Valerie Real Estate. And today we are going to be reviewing the stats from the first month of 2025. So we're going to be looking at the stats from January. We are going to review the under the radar stats like we always do. So that's months of inventory and sales to new listings ratio, to kind of get a temperature on where the market's at. We are going to look into the under the radar neighborhood of Eglinton West and kind of break down the numbers from Fairbank, from Briar Hill, from Oakwood Village, and from Keelesdale, just to kind of see how those numbers compare to the rest of the city of Toronto and get into why this neighborhood is under the radar. And then lastly, we're going to touch very briefly on the Toronto Real Estate Board's State of the Market from 2024. They did a deep dive into the stats from 2024 to kind of see how they compare to 2023, and then give some insight on what is to be expected for 2025. I mean, a lot has happened already this year when it comes to tariffs and taxes and political instability and Bank of Canada rates and elections, both provincially here in Ontario and impending elections at the federal level as well. A lot going on in 2025. So we'll touch on that near the end of this podcast. So let's jump right into things. The Market Watch from January 2025. So first things first, let's look at the year over year summary down in the bottom corner. Right here, highlighted down here. So sales, January 2025, sales dropped about 8% over 2024. I almost said 2023. So we saw just over 3,800 sales versus almost 4,200 in 2024. So quite a significant drop in the number of sales last month versus the year before. That doesn't surprise me at all. Things weren't too busy on my end. I do have some buyers kind of coming into the market now, but yeah, things started off a little slowly in January because, again, like I already talked about in the intro, there's a little bit of instability going into this year. Listing inventory is up huge though, right? So new listings up almost 50% over last year. That's a trend that's been continuing pretty much over the last 6 months. Inventory keeps piling up, which then shows in the active listings up 70%. So inventory continues to pile and things aren't necessarily all getting absorbed. So something interesting to take a look at once we get into the under the radar stats. Average price though, up 1.5%. Not too much to read into that. I mean, if we look at month over month, actually prices are down month over month. So higher than last year, but month to month, they're still trending downwards a little bit. And then days on market for properties, fairly flat overall to last year. Now, if we look at the numbers, the average price numbers, and we'll look at specifically Toronto. So let's look at the 416 only. So detached prices, average price in January was just under 1.6 million at 1,579. Semi-detaches, just over 1.1 million at 1.15. Townhouses just under that $1 million mark at 941,000, and then condos just under 700,000 at 691. So as a percentage, year-over-year change, detached house prices were, effectively flat, up 1% over last year. Semis down 3.7%. That's interesting. Townhouses up 5% over last year. Another interesting stat. And then condo prices down 2.4% over last year. That one's very interesting. And I'll tell you why. Because last year, condo prices had been down. They were trending downwards into 2024. We roll over onto 2025 and they're still trending downwards. And I think that's likely due to if we go back to the active listings up 70%, a lot of that listing inventory are condos, and they aren't selling at the same rate as houses. So it's not surprising that prices are coming down when there's that much inventory sitting on the market. Okay, so now let's get to those under the radar stats that'll kind of shed light on some of these numbers that we just reviewed. So I'm going to get down over here to the numbers just for the City of Toronto. This is a City of Toronto podcast. Okay, so first number we're going to look at is the SNLR trend, the sales to new listings ratio. So if we look here for the City of Toronto, City get only 38%. So only 38% of the new listings that hit the market sold in the last month. So that is a number that screams buyer's market. Balanced market is about 50%, so we're well below that number. If we are to look at the under the radar neighborhoods here in the West End, so that's W03, for example, it's a little closer to 50% at 47.1. So fairly balanced market in W03. W04, which is also under the radar, so Briar Hill stretching over to Weston, that's sitting at 38%, so that's very much more buyer's market territory. And then if we look at C03, which would encompass Oakwood Village, sitting at about 40%. So again, the trending towards buyer's market territory as well. So overall, other than a couple of pockets here and there within the under the radar neighborhoods, overall buyer's market, and that's just due to inventory. There's a lot of inventory, so buyers have choice. Buyers aren't just jumping and snapping up everything that's hitting the market right away. If you're a buyer out there, you have time and you have choice and you can negotiate price. That's what a buyer's market means. Now, if we were to look at some other interesting numbers across the City of Toronto, if we scroll down to the numbers in the East End, there's a lot of East End neighborhoods, E01 through E03. So those are all the neighborhoods, let's say, stretching from about Yonge Street over to the beach, kind of south of O'Connor, let's say, that pocket down to the lake. So those neighborhoods, we're seeing at about 50%. So those are pretty balanced markets overall. And I can speak to that. I mean, I have clients looking in the East End, and now it doesn't necessarily mean that every property is in a balanced market territory. What that means is that some of the nice properties are selling quickly and getting multiple bids and selling for a lot of money over asking. Some aren't getting the bids and aren't getting the attention and are sitting and are taking longer to sell. So pretty much balanced market. So the best way to look at that if you're looking in the East End is the nicest properties are selling for a lot of money and selling quickly. The ones that don't have that aren't the bells of the ball just simply are taking a little bit longer to sell. Those are the ones where there actually could be good buying opportunities. So I saw it personally with some clients. We looked at a house. It was a beautiful house, beautifully renovated house in Leslieville. I thought it was going to sell and get a whole bunch of offers on offer night. Got a couple of offers, didn't sell, relisted, and had to sell a few days later. Now, the problem with that property just didn't have parking. So when properties don't hit the buyer's list of everything they want, they just typically tend to take a little bit longer to sell. Okay, now let's look at some of the central neighborhoods in Toronto when we look at sales to new listings ratio, because some of them are sitting at below 30% in some scenarios. So you could be saying, in some cases, only a quarter of the new listings that are hitting the market have sold in the last 30 days. And I can tell you right away why that is. So one of those neighborhoods, C08, predominantly condo. I mean, that's the eastern edge of downtown Toronto. You are looking at, 26.9% as a sales to new listings ratio. So a lot of condo inventory, not a lot of condo buyers. A lot of that condo inventory, I can tell you right now, is smaller units, the stuff that's sitting and not selling. A lot of one bedrooms, studios, sub 700 square foot, 2 bedrooms and 1+ dens. The stuff that is what we would like to call investor product in many cases just simply isn't selling. End user stuff on the other side is selling at a decent clip. So if you have a 2-bedroom, 3-bedroom, or a good sized 1-bedroom or 1+ den, let's say a den that you could actually use as a bedroom, that stuff is selling at a decent rate. Everything else is sitting. So that's really affecting the sales to new listings ratio in those neighborhoods, in the central neighborhoods of Toronto where there's a lot of condo stock. Months of inventory tell the same story, right? So months of inventory, typically a balanced market is about 2.5. City of Toronto, we are sitting at 3.9 months of inventory. So quite a bit above that 2.5 month balance mark. And right across the board, I mean, in the West End, there's only WO2 that's just below that. WO3 is sitting pretty much at balanced. The numbers track all the same sales to new listings ratio numbers right across the city. When we get to the East End, we're below 2.5 in many neighborhoods, right? So we're seeing at 2 months, 1.9, 1.8. So let me back it up for a second. Months of inventory means if there was not another listing to hit the market, how long would it take in months to sell off that inventory? So in the East End, under 2 months, all the inventory would be sold. When we look at central neighborhoods, a lot of condos, in some cases, well over 6 months. And then in the West, we're sitting around from 2.5 to 4 months to sell off product in the West End. So in summary, we can sum all this up saying that we are either in buyer's market territory or balanced market pretty much across the city. So that's what to expect if you're a buyer out there. And if you're a seller, that just means you have to market your property effectively, which means painting, staging, decluttering, getting all the stuff out of there, making sure your property shows perfectly. That means also choosing the right agent that will take proper photos, so high definition, high res photos, doing video tours, doing proper online marketing, right? Gone are the days where you're going to be selling a house or a condo from a flyer you receive in the mail. Make sure your agent is tapping every resource they can and not just simply taking a couple of crappy photos and putting them up on MLS. That just doesn't cut it in this market where there's that much competition and that much inventory. So if you're a seller out there, find an agent that will do all of those things, right? That will help you with the staging. That will help you arrange some of the contractors, get your place looking great. And most importantly, that has an online presence that can market your property to more than just a few people who browse MLS. Okay. Now, before we get into the under the radar neighborhoods, let's quickly scan over to the month to month. So I mentioned it earlier and I said, hey, January, while the numbers are up over last January, the month to month trend is telling something different. So we look at the monthly statistics. We'll start like from 2024 because we're only 1 month into 2025. So we look at month over month. If we start like, let's say in September, numbers were 1.106, and then they went up in October to 1.134, and then they came down in November to 1.105, December 1.062, and now January 1.040. So you're seeing that October was likely the peak in pricing, and we've been coming down from there. Now, a lot of that is due to seasonality. If you go through most years, that does happen. But it's still quite a significant drop over where we were in October, right? So what is that, like almost $100,000, really, like $90-something thousand from the peak in October to now. So some of that is just, the best properties aren't necessarily getting listed in January. It's not a great time to sell, all that kind of stuff, but it's still something to keep an eye on, especially when we get to review the February numbers in a month from now. February, I can already tell you there's been a lot of better listings that have been hitting the market over the last couple of weeks. So it'll be interesting to monitor that number because, again, like I talked about in the intro, there's so much instability right now, right? Even though rates are coming down and all that kind of good stuff, should be good stuff, there's some concern out there, especially for a lot of buyers. So something to keep an eye on as we move forward. Okay. Now let's jump into the under the radar neighborhoods. That's what a lot of you are here for. This is what I'm really interested in. I went through the stats to give you guys an idea of where we're at overall, But now let's get into the nitty gritty. Let's look at the under the radar neighborhoods and how they compare to the overall average in the city of Toronto. So the first under the radar neighborhood we're going to look at, straddles Eglinton West, is Caledonia-Fairbank. So when we look, Caledonia-Fairbank actually had a pretty strong month when we look. Actually, hold on. Let me just adjust these numbers here. January to January. Here we go. That didn't really change much. Okay, January to January. So if we look at the numbers overall in the average in the city of Toronto, and this is just city of Toronto. The numbers I was talking about before was overall TREB, the numbers in the last little segment. This segment, specifically Toronto. So the average price in Toronto, around 1.1 million, so 1,098,000. If we were to compare that to Caledonia-Fairbank, we're sitting at 1,057,000. So you could say, this is an under-the-radar neighborhood. Why? There's only a $50,000 or $40,000 difference between the overall average in the city of Toronto and Caledonia-Fairbank. In the city of Toronto, though, there are a lot of condos being sold that pull that number down. Caledonia-Fairbank, there's very few condos in Caledonia-Fairbank. So really what you're doing is almost comparing Toronto detached numbers, which are almost like 1.6 million, versus Caledonia-Fairbank, which you're sitting at just under 1.1 million, right? So that's the difference, right? So in Caledonia-Fairbank, most of these sales are single-family homes at just over $1 million. So you can see why I'm saying Caledonia-Fairbank is an under-the-radar neighborhood. Now, if we look at days on market, median days on market in Caledonia-Fairbank is only 10 versus 17 for the city. So people are starting to catch on to Caledonia-Fairbank, and things are starting to move there. Okay, now let's scoot over to Keelesdale. Wow, Keelesdale. Definition of under the radar neighborhood. So Keelesdale, the average price, $893,000 versus the overall average in the city of Toronto at $1,098,000. In many, and again, Keelesdale is another neighborhood, mostly homes. There are some condos that have sold in Keelesdale, but there's a lot of houses and a lot of houses at that price point. So you're looking at semi-detached houses for under $1 million in Keelesdale. And they're only sitting on the market for 15 days versus 17. So again, properties are selling at a decent clip because affordability, right? You don't have to move all the way to the suburbs to be able to buy a real freehold house in the city Keelesdale will have 2 LRT stations, one at Caledonia and one over at Keel. So 2 subway stations will roll right through that neighborhood. People are seeing the potential there and they're buying the homes there. So really interesting numbers from Keelesdale. Now let's go over to Briar Hill. That's where I am right here. Beautiful Briar Hill. Briar Hill, average selling price, $907,000 versus the 1.1 in Toronto. $907,000. I don't know if you watched my last podcast. I showed a video of Briar Hill. Briar Hill is, there's a few condo towns and I live in a condo in Briar Hill and there's a few older condos as well. But a lot of houses, a lot of the inventory that has sold would have been houses, $907,000, and it's a lot of bungalows. Actually, watch my last video where I talk about the value of a bungalow in Toronto. Some really interesting insights in our last video. So check that out on the channel. But yeah, $907,000, again, for a house in the city. And you don't even have to wait for the LRT because here in Briar Hill, there's a subway station already here. Eglinton West Station, from where I am in Briar Hill, which is like Marley and Roselawn, you can walk to the subway station in like 7 minutes. And that's the Young University Spadina line. So there's already a subway station right here, and you can buy houses for $900,000, and you're right next to Forest Hill. That's enough of a sales pitch for Briar Hill. Call me if you want to get into Briar Hill. Properties are only sitting, again, for 15 days as a median. And yeah, buy in Briar Hill. And then last but not least, let's look at Oakwood Village. Right. So CO3. So right away, I mean, CO3, I've already had people say like, whoa, it's actually more expensive than the overall average in the city of Toronto. It is. So $1.2 million, let's say, as an average. However, if you've watched this podcast, you've heard me say it before, if this is your first time, this is the reason why Oakwood Village is an under the radar neighborhood, because it's under the radar for luxury product. So it sits right next to some of the most expensive neighborhoods in the city of Toronto. So if we are to compare it, let's say as an example, to one of the neighboring neighborhoods of Forest Hill South. Forest Hill South, the average price is $3.2 million. Forest Hill South sits right above Oakwood Village, and it's $2 million more expensive. If we are to look, I mean, that's an extreme example. If we are to look at just even Humewood Cedarvale, which is right next to it, $280,000 more expensive in Humewood Cedarvale. Again, you're getting a significant savings being Oakwood Village over Humewood. And then if we are to look at Yonge and Eglinton, which is a little bit further down the street, 1.6 million versus 1.2 million. So $400,000 less expensive than when you get a little bit over to Yonge and Eglinton. So you see what I'm talking about with Oakwood Village being under the radar for those of you looking for a little bit higher end product. There's a lot of beautiful homes being listed for sale and selling in Oakwood Village. Not only that, Oakwood Village, and some of you already know this, Oakwood Village is the next trendy neighborhood in the city of Toronto. If you love Dundas West, if you love Ossington, if you love Queen Street East, if you love Queen Street West, get into Oakwood right now. The stretch of Oakwood from St. Clair to just above Rogers Road is going to be the next trendy spot in the city of Toronto. You already have some great restaurants and great shops opening there, right? Already, I mean, you have like Oakwood Espresso, you have Primrose Bagel, you have Portia's Lasagna. So there's some great spots already there, and there's more coming, and you want to be on Oakwood right now. Even I am looking at commercial space on Oakwood before the rents start skyrocketing through the roof when those landlords catch on to how trendy the neighborhood actually is. So that about does it for that. I mean, it's easy to see just based on the numbers why I keep saying that Eglinton West is the under the radar neighborhood, is the Brooklyn of Toronto. It's on the same trajectory that we saw in Brooklyn, let's say 15 to 20 years ago. So if you want to get into Toronto's version of Brooklyn, get in now before you're completely priced out, because right now it is affordable for a lot of you young professionals. You don't have to move all the way out to the suburbs to be able to get something under $1 million in the city of Toronto. Or if you're looking for that luxury product, you don't have to have a budget of 3 to 1.6 to 3 million. You can find something in Oakwood Village that is adjacent to all those aspiring neighborhoods that you want to be in. Okay. Now let's briefly touch on the 2025 market outlook that TREB just put out. So I'm not going to there's going to be a lot of agents that do full deep dives onto this. I'm not going to do it. I'm just going to kind of review quickly. For those of you watching this on YouTube, you can see it here on the screen. So they're saying here, so the first line of this report, they anticipate that there's going to be about 76,000 home sales in the GTA in 2025. So 2024, there was about 67,000. They anticipate almost 10,000 more sales. I mean, the first month of the year isn't showing that. So I guess they anticipate a very busy spring and fall market. We'll see what happens, right? Do I think, I mean, that's a lofty goal. Hey, I'm not going to argue at this point. In February, if we're also down over February last year, I think this projection might be a little off. Average price. So average price in 2024 was just over 1.1 million. They expect a very modest increase in price. 30 grand more. I think it's effectively going to be flat to last year. Maybe it could be a few thousand higher, a few thousand lower, but I think they're pretty bang on with pricing, right? They expect a 2.6% increase. I'd say plus minus 3% is what I anticipate for this year. And then they talk about lending rates and how that's obviously affected housing. What I'll say here is just lending rates this year, it's tough. I mean, I do believe we anticipate quite a few cuts over the rest of the year, but I mean, everything is so volatile right now between like tariff threats and all this, and like monetary policy and our weak dollar and our weak economy. Who knows what's going to happen this year? So it's a lot of these projections are really tough because so much can happen, right? I mean, Donald Trump is mentioned in this, obviously, and even though he's a president of the United States, I mean, he affects a lot of what's going to happen here. So it's really going to be interesting to see what happens this year. Like in the last podcast, I'm not going to predict anything, and I'm not really going to try to add my own insight here because I truly have no idea what's going to happen. One thing that's interesting here that maybe I disagree with slightly is that they anticipate strong rental demand in 2025. Now, that's just based on a survey. I don't know if I necessarily see that. I mean, we're going to see less foreign students coming to the GTA. We've already seen quite a few less people moving here. A lot new purpose-built rental product coming to market that we haven't seen in decades. So I don't know if there's necessarily going to, I mean, there might be a little bit more demand, but there's more than enough supply, I guess I should say. So maybe the demand might increase a little bit, but we're also getting a whole bunch more rental supply. So if you're a landlord out there, I think there is demand for certain types of rentals, right? So let's say if you have ground-oriented rentals, so what I mean by that is small infill projects. So if you have like a triplex or a duplex in an established neighborhood, I think there is some demand for that, and it's just based on affordability. A lot of people don't have down payments or aren't able to buy houses in some of the more established neighborhoods. So I think if you have, let's say, a little bungalow and you plan to rent it out, I think there's going to be some demand for that type of product because that's something that just like the large scale developers aren't necessarily delivering. That's something that the traditional condo investors, right, aren't really getting into. So I think if you're an investor out there, really look into duplex, triplex, and multiplexes. My last video talks about that a little bit. There's going to be a lot more content on my channel and at our brokerage at Valerie. That's a big focus is multiplex because I think that's kind of the only residential investment product that is going to do well for investors, right? Where you actually see break evens or some decent returns. New homes market. New homes market, they continue to trend lower. Not too many people out there. They say 39% of likely buyers plan to purchase pre-construction. Not surprising. Even the average new house prices are trending lower. I mean, the reality when it comes to new houses is if you're a buyer out there, waiting 4 to 5 years through all of this uncertainty, it's just not something that someone wants to do, right? If you have the money to buy something right now, you want to buy something right now. You don't want to put your money down and have to wait 3 to 4 years, and who knows what the interest rates are going to be, who knows what's going to be happening in the macroeconomic environment in 4 years. I mean, so much has changed in the last month. So I think there's a lot of uncertainty, and it's really a tough sell for new construction. That being said, if there's buyers out there, I still think some good buys are smaller infill projects, right? So small townhouse projects, small condo projects. I think those are less risky because you're building less units, and those are easier for developers to deliver. But a lot of the large scale buildings, so like the large suburban developments, the large condo developments, that stuff's a little risky. And I mean, personally, it's not something I really want to touch unless if it's a deal of a century. And perhaps you're just looking to invest and not be an owner occupier. This goes on to 2024 year in review. So it shows like basically all the home types. I mean, pretty much when we looked at the numbers from 2023, numbers were down pretty much across the board from 2023 to 2024. Listings were up significantly in 2024 versus 2023. So seeing here 166,000 versus 142,000. So 20,000 more listings were on the market this past year over 2023. I mean, some big numbers. I mean, condos are up 120%, townhouses up to 122%. Total sales. So the only house type that didn't see increased sales over 2023 was condos, right? Everything else was actually quite a bit more elevated over from 2024 to 2023. But just condos, right? And then sales, obviously Toronto's the big leader in sales, not surprising. And the rest of this year in review starts talking about transit and politics and all that. We're not really going to get into this on this channel. I mean, if you want to take a read through it, I'll put a link to it down in the description. So take a look, take a read through. I mean, there's actually a QR code somewhere here on the screen. You could probably scan that. It'll link right to the report. Take a read through it. Now, 2025, as I've been saying, has been the year of uncertainty. No one knows what's going to happen. Just this past week, we had tariffs implemented not even implemented for like a day, and they got retracted. And there's all these threats and political instability and so much going on, right? There's a ton going on. It's a lot to process, a lot to digest. Where my mind's at and what I tell some of my close clients and close friends and colleagues and so on and so forth is, I think 2025 is just going to be the year of just getting back to basics, right? I think the times of like some of this aspirational stuff, right? Like, oh, buy 5 condos and you're going to be a millionaire and all these kinds of things, all these very complicated maneuvers are gone. I think we just have to get back to basics when we look at real estate, right? So if you need more space, right, you sell and you purchase more space, right? Or you renovate your space to accommodate whatever it is you need, right? Less speculation as well. Like I understand from a client perspective, sometimes it's better to buy first because then you secure what you want and then sell later. But getting back to the basics, if you look at the history of real estate, quite often people would sell their house first. And then once they have that sale, they know exactly how much they're going to be getting from their sale, buy second. Just because of all the uncertainty and with the economic state of where we're at, I mean, who knows what's going to happen this year in terms of like job losses and so on and so forth. Last thing you want to do is buy a house and then have to rely on the sale of your house. And let's say inventory spikes and then it's sitting on the market and then you can't close and all these other kinds of things. Be a little bit more conservative with the way you approach real estate. And from an investment perspective, as I kind of mentioned earlier, I think gone are the days of just, let's say, buying a house and renting out that full single family house. Because I mean, the numbers don't make sense, right? I mean, just recently I had a client asking like, oh, if I were to buy this house, how much would it rent for? I'm like, well, he'd probably be about $1,000 a month underwater with the 20% down on renting out the house. But that same house, if it was duplex, they would actually probably be break even, right? It was a small house in Leslieville, 3 bedrooms, 2 bathrooms. So the house itself would probably rent for, I don't know, about $4,800. But if it had a basement apartment, right, you'd probably be able to get another $1,300, $1,400 out of that, right? And that's just extra money, right? So at that point, then it's like with your mortgage, tax, and everything, you actually would probably break even if you had a basement apartment. So, and I think if you approach your investment like that as well, right? I think like there still are opportunities to build wealth as an investor in this market, and it's looking for opportunities like that. So gone are the days where you can just buy a condo or a single family home and rent it out and do well. I think now you have to look at opportunities where you can find houses that are either already divided into 2 or 3 units, or buy a house that can be easily divisible into 2 units, because at that point you can maximize your dollars and make it go a little bit further. And if you're having a tough time with some of the numbers, so if you're not looking to be necessarily a landlord, you want to buy a house and maybe the numbers don't quite work, or you're at the very edge of affordability. In my last video, I talked about there's a hybrid model, right? Where you can buy that house with the basement apartment, right? Or buy a triplex where you live in 1 unit, rent out another 2. Because right now, actually, the Canada Mortgage Housing Corporation, CMHC, is actually offering products where you can get insured mortgages for rental properties, right? So you can live in a unit and get up to 90% financing in some scenarios on your residence, as long as you have a rental unit, right? So there's some opportunities out there to be able to get into the market, and it's just kind of getting back to what I call getting back to the basics of real estate. So, yeah, I mean, that about does it for this podcast. I mean, I think we've kept it fairly brief. We didn't really go into too much. But if you're, I mean, keep watching our channel. We have a lot of cool videos coming out on multiplex. We're going to be talking specifically again about the neighborhood of York and how it's actually a very friendly neighborhood for multiplexes, for building duplex, triplex, garden suites. There's a lot of properties here that are very friendly to that house type. We're going to keep talking about condos and families living in condos, and how condos are a legitimate option for a lot of people. And we're just going to be talking about a lot of topics that just really the media doesn't really cover and give good insight into. So hit that like button, hit that subscribe. We're going to be hitting you with a lot more content. Oh, and a lot more AI content, because I do work for Valerie, an AI-powered brokerage, the only AI-powered brokerage in Toronto. So, it might be in Canada, to be honest. So hit that like, hit that subscribe, and thanks again for watching. Peace out.